Good afternoon, everybody. Welcome to a bullish edition of the TraderMerlin Show. It is Friday, the 11th of November, 11/11/22. Isn't that convenient? Add the two together, get 22. Cheers to not only all the viewers and all the listeners out there, but to all the veterans of the country. You know, it is obviously Veterans Day today, and yeah, I've had many conversations with some of my good friends who are veterans, and many of them come back from combat and feel unwanted and neglected by society. So, you know, at least one day a year, we can go out there and give them as much love as possible. Buy them a drink, buy them some dinner if you see them, or just give a shout out to any veteran that you know for doing their service for this country. Whether you believed in the wars that they were fighting for or not is irrelevant. They did their duty as they were told to do. So cheers to all the veterans out there. Today we're going, I figured since it's veterans, I went something Americana. We're doing Jefferson's Reserve today. This is a delicious Kentucky bourbon. So cheers to everybody. All right. Last night, as these markets were trucking along, I was actually sitting there watching the futures markets. I'm like, man, I really wanted to go short. I almost loaded up on some futures for a short position just because I kind of felt like it was going to roll over because we hit those supply levels that we talked about on yesterday's show. But lo and behold, it just broke right through them. So let me show you what I was looking at in the after-hours session. I was really focusing on that NQ. And if we go to a 5-minute time frame here, I'll whittle that one over there for you. Here is, you know, by the time I went to bed, this is pretty much what that chart looked like. And as you guys can see, we did break through this upside here. And that yellow box you see at the top was kind of the upper range of supply that I was looking at. That's, if we scroll back here, well, I won't be able to scroll back there, but you know, I kind of expected to stay in that yellow box range and then start to drift down. So by the time I went to bed, I said, now it's breaking through the high. I don't feel confident enough to go long again since I already exited my long positions yesterday. But yeah, Chris says, Chase says, let the dumb money run it up. And yeah, we'll see. Who knows, man? You know what's crazy is to think that there is the potential, if we have a spectrum of 0% probability to 100% probability, somewhere on that spectrum, and it's higher than 0, and it's lower than 100, there is a real possibility that we could see all-time highs again. It seems inconceivable, but it's a possibility, as it was in The Princess Bride or in Dumb and Dumber, right? So you're saying there's a chance. Well, more like 1 in a million, 1 in a billion, but there still is that chance. So I do agree with you, Chase. I think let them run it up just a little bit more today. And next week, and then maybe I have some better shorting opportunities because CPI number came out great, which we'll talk about here shortly, but PPI next week could have a big impact as well. So, you know, when markets opened up this morning, you can see we actually started drifting down, and unfortunately, I wasn't up at the crack of market open today because I would have maybe got suckered into a short position here as it started to sell off. But within 5 minutes, it already reversed and started to make new highs. So all in all, a pretty decent day for equity markets. Let's start there and move our way to the top. Start at the bottom and move our way to the top. We had Bitcoin. Again, I mentioned that there's probably more pain coming. You guys may have seen the news last night. BlockFi is now freezing withdrawals. FTX, which we did a show on yesterday, filed Chapter 11, which means bankruptcy. And as I'm encouraging everybody to do, if you have money on any one of these lending protocols, and I mean any of them, get it off immediately. Like, stop watching the show, watch the rerun. Go to your BlockFi account. Well, BlockFi is now closed. Go to your Crypto.com account. Go to your Nexo account. People are like, oh, Nexo's not going to be impacted. They're in Switzerland. They're good. They could have exposure to FTX. And it seems like everybody has exposure to FTX. So get that money out as soon as possible. I pulled a bunch off today from Nexo and from Crypto.com, and all of a sudden my transactions were limited on Crypto.com as far as what I could get off those exchanges. What we'll probably see going forward is most of those lending protocols where you're earning that high yield on your crypto, they're probably going to go under. So be careful out there. If you got them on there, pull that money off if you can. I have some that's locked up on Crypto.com for another 39 days. Well, hopefully they won't go under by then. So yeah, get your money off of those BlockFi, Celsius, Voyagers, anyone that you can, get it off those. Move it to cold storage. That's to your little nano ledger devices that I always show you on the show. You get something like this. Move it to cold storage and just keep it there till the dust settles. You know, if you're going to go to an exchange, you've got Binance is probably going to be one of the safer ones. Coinbase is probably safe as well, and Kraken would be my number 3 from a safety perspective and what I know. So that's the crazy part of it. I guess since we haven't done one in a while, I'll call it a donkey of the day, since when's the last time I actually did a donkey of the day? I guess the donkey of the day for me is going to be Sam Bankman-Fried. I didn't realize the full extent of how, the word might be inappropriate, but juvenile Sam Bankman-Fried was. I didn't realize that FTX was being run by all the people in that house in the Bahamas. I was sitting there, I knew he lived in a house with a bunch of other people, but they were pretty much running the show of FTX in Alameda. That's kind of crazy to think that 10 people rented a massive house in the Bahamas and were just running it out of there, and they were all very, very young. So probably should have been a warning sign early on had I known those details. But as far as making all these heartfelt apologies, it's like, you got people who lost billions of dollars, man, and a lot of people losing money because of your actions. You're a donkey, you're a jackass, and I hope you lose all your money, Sam. Really hope you do. Yeah, it's all Sams. Gotta watch out for those Sams. Yeah, ooh, good one, Chase. Sam Bankman fraud. Ooh, that's good. You could almost put that out on Twitter, but then someone will come after you and say that that's, they're going to sue you for slander. All right, so let's go look at what happened out there in the crypto space. Yesterday was looking great from an upside perspective, right? With this huge green candle. I bought more yesterday. I bought a bunch of Solana, and I felt pretty comfortable with it. Then all of a sudden today, we gave back a lot. Bitcoin was down almost 10% today. Well, it was over 10% at one point, finishing down right now as we speak, down only 9.11% to 16,160, and that's really the only negative piece out there. Once we jump up to the Dow, it's all positive. Now, the Dow wasn't that positive. You can see 0.16% gain, so very, very, very slight gain. And if we look at this picture, it's starting to look better. It's starting to look juicy. And when I say better, that doesn't mean necessarily bullish. Let's go to here and then stretch this bad boy out. Notice right where the Dow is, right? The Dow has this, what's called a spinning top, or some might call it a long-legged doji. Bottom line is the candle today represents that the Dow kind of opened and closed at the same price today, right? With some good trading activity. Those long topping tails and bottoming tails show you that there was action, but not a lot of conviction either way. But it also came up into that yellow zone, which goes back to a supply zone that goes all the way back to August 16th and 17th. So when you look at this picture, it's kind of one of those breaking points for the Dow. If it breaks above those highs that we saw on August 16th and 17th, what that means is it's broken that downtrend that it established in January of this year. And that's obviously a very positive thing for the markets going forward. So kind of curious to see how this happens. If you're going to short the Dow, this would be the spot. I would say short, coming into this and potentially, have your stop loss obviously slightly above it. But it's really risky given what's happening next week with the PPI numbers on Tuesday, and we'll talk more at the end of the show about that one. So there's your Dow, barely up today. A lot of indecision as it came in its overhead supply level. We'll see how that pans out when futures open on Sunday night. Same thing with the Russell. But the Russell, a slightly different picture, certainly more off of its highs. It was more of a gain, 0.92% up for the Russell at 1887. But you're also coming back into the supply zone, which is not as clear cut as it was in the Dow, but that's the same area. Basically goes back to September 12th and 13th is the immediate supply zone for the Russell that it actually ran into today. S&P 500 broke through that supply zone I had mapped out on yesterday's show. I was talking about potentially shorting these markets if this started to show some traction to the downside, but it didn't. And to me, that's really important, is to not, and I think I emphasized this yesterday, when you see a chart pattern that looks like the S&P did, where it came up into a supply zone, instinctively you're saying, okay, great, shorting opportunity. You have three ways you could trade this. Number one, you short immediately as it comes into your supply zone, right? That's the more aggressive way to do it, and you better have some seriously strong conviction that that supply level is going to hold. Number two, you wait till it gets into the zone, maybe near the high of it, because you think it's going to turn, and you get yourself a better entry price for your short. Option number three is going to be you wait for it to turn. You wait for it to confirm that it's in fact responding to that supply zone and coming down. And in this case, that's what I was doing. I was waiting for this to confirm that yellow box was going to be supply and hold, but it didn't. We ticked down just barely on the open, rallied back up here and popped to the upside and broke through. So at this point, it's looking very positive for the S&P 500. Your next big stop is going to be right around 4150. Which I think a lot of people would love that from a bullish perspective. Another 150 points to the upside would be a damn good thing for a lot of your long accounts. Of course, I'd be a little bummed that I closed out of my position early, and I think you did that too. Let's see. Let's go to where was it? Big Ab, you said something. You closed out your positions. I thought I said sold my calls today and tiptoed into QQQ puts for nice. Well, aggressive on the QQQ puts. I wanted to do that myself, but I did not. Let's get to the Qs here in just a second. Here's gold. you talk about just a monstrous rally. I'm really bummed that I sold call options against my gold position. I didn't think we would have this big of a rally. If you look at the gold chart, I'm long gold, and I sold calls that are right where this dashed red line is. And the way that we ripped up, I mean, obviously, I love the fact that I've got some nice gains on my gold position, but I sold calls against that to obviously lower my cost basis and drop my entry price. But this nice move we've had up, bummer, because I'm not participating in any part of these gains above that 1740 mark on the gold futures. So kind of bummed about that, but hey, you know what? Again, not going to complain about the profit that I have on the trade. Hopefully ideally what'll happen is by next Friday, it'll drop back down and get right to 1739, just below my entry price, and I can sell call options all over again at a higher price. But wait and see, we still got 7 days till I get to my my exit here on this one. And then moving on to the NASDAQ, which has a pretty similar picture to the S&P 500, that it broke through this yellow box, this overhead supply, which is a very positive sign for anybody who's bullish on the markets. We've broken out of this a couple months sideways channel here on the NASDAQ, and that obviously brings into question, what are those next levels? Is it going to be this 12,150 mark? Is it somewhere right in that, or are we going to go all the way up to this 1280 mark? Don't know which way we're going to go, but it's been very positive, although my gut tells me that this is a bit overdone. What I mean by that is, if you look at those inflation numbers, which I will show you here right now, here is the CPI number, right? This is what caused all the market to just lose their marbles yesterday and just load the boat long. I mean, you have the NASDAQs up from peak to trough in 2 days, like 9.6%. I mean, that's awesome. And thank goodness that I was long calls on that one. And I'm still long QQQ. I just got out of my call options that I had, which were really getting some good rate of return. So here is the CPI number. And as I mentioned on the show, what the Fed wants to see is exactly what's happening. They want to see that inflation is drifting down. Not that it's back at 2%, right, which is their target goal way down here, but that this slowly starts to drift down. And now, and then next month, maybe we come out at 7.5, and after that, it's going to be 7.1, and then all of a sudden, we start to fall down faster. What they don't want to see are those inflation numbers start to curl back up and show, a steep rise. So this is why the market is rejoicing that perhaps because this is happening, inflation is under control. And again, I'm not saying inflation is under control. I'm saying this is what the Fed is market's reacting to, that they believe inflation is under control, and hopefully this will keep on drifting down. The Fed will back off its policy, which right now, as you can see, 85% chance of a rate increase happening on December 14th, and that has not changed in the last 24 hours. It's pretty much exactly the same. So that's the situation we find ourselves in. My question for myself, and it's not for you, but it's for myself, is are we going to see this thing turn back down? And I have this gut feeling that you're actually going to see a little bit of a rally here. Really based off of the CPI number, optimism in the Fed. And if we get good news off of the PPI number on Tuesday morning, now the question is, does this come into play? I think long term, we should still be looking at shorting at supply zones, but want to be careful because I believe there's just unbridled enthusiasm on the part of these traders who've been getting beat up and their portfolios are down. They're jumping back in and loading up on positions. So we'll have to wait and see what happens out there with the PPI number on Tuesday. Drew, also pretty crazy to see the USD having one of the, and that's, again, a big catalyst. Yesterday we were down 2%. Now we're down another 1.41% today. If you look at let's call it week and a half, right? If you go back to November 3rd, where this sell-off occurred, you're looking at a 6% slide in the value of the U.S. dollar. I mean, that is a gigantic move. And are we done? Are we done? Are we going to drop all the way back down to this 105 mark that we've got with the red line on here? Let me get rid of these lines. That is a very real possibility. It looks like panic is setting in. You're seeing people just unload that dollar. Not particularly sure why, because they're still getting good yield on it. But Chase's 104, 105 level, that's what we've got mapped out here, that 105. And basically, if you go to the tiptoe, you're looking at 104.50 up to 105 is that really next demand zone on this bad boy. And I don't see anything else except right where we're at this exact moment. You notice right here, you have a rally up, slight hesitation, and then all of a sudden another big move up. That would be another area where I would expect it to stall, but right now that thing is it's dropping like a bad habit. I mean, it's pretty sharp decline there, which is one of the catalysts we're seeing for these equity markets going forward. Let's see. I just saw today that Fidelity opens waitlist for zero fee retail crypto trading. Yeah, who knows what Fidelity is trying to get in, but I think that they're a little bit late. No fees, and they probably won't go bankrupt. And they have Bitcoin and a few others. Good timing since Bitcoin is on the sale. Yes, I do think that number one at this point isn't, oh, let's trust Fidelity or let's trust Coinbase or let's trust, Binance. Number one should be, I trust myself, and that means if you are into crypto heavily like myself, get one of these devices, get cold storage and send your crypto to it, right? Keep control of your cryptocurrency. And then, like I say, we're going to get regulation. We'll get clarity. Then we'll understand the safety and risks to each of these exchanges where you can buy and sell crypto on. At that point, then we can deploy our capital, maybe earn some yield. But at this point, it's way too crazy. And the exposure the range of exposure that FTX has an impact on in these marketplaces, as well as Alameda Research, is way too vast. And you're still seeing the dust settle from the Three Arrows Capital issue that happened back in March or May. I still think that there's damage. You're going to hear more articles, more headlines about other firms going under because of FTX, Alameda Research. And it's just be careful. Put your crypto where you have control. Not, oh, I trust that exchange or I trust that. Put it in your own hands, right? Keep everything away from institutions. Tom, I only want Bitcoin's gains. I don't want Bitcoin. Yeah. Well, I want Bitcoin. You can sell me your Bitcoin and I'll give you a fraction of the gains. How about that? Okay, so that finished off for our indexes. NASDAQ 1.85% move. Again, just a ballistic two-day run out here. Loving this thing. We'll call this the Falcon X two-day rally. But that wasn't the best. Best out there was crude oil, which, interestingly enough, we had that trend line in there, reacted to it, and bounced up, giving us that ascending triangle, or working better at giving us an ascending triangle. And we'll have to wait and see if this ultimately pans out and moves to the upside. But crude oil looking pretty good today with a 2.88% move, finishing at $88.96 a barrel. All right. Let me pause here real quick for another quick cheers to all the veterans out there. Thank you for all that you do. I will be out this evening, and maybe if I see a veteran, I'll buy you a drink. Hey, Eric, good to see you. I got your question coming up here. So let me run through some of these questions. When you look at the economic data for the U.S., obviously it looks like it's starting to improve, right? Inflation getting slightly better. But we can go out here and look at other markets, like here is the British pound. And I'm kind of curious as to what's going on here. You see, obviously, a nice move up starting in late September, right? You're making higher highs, higher lows, although gradually, but it is showing strength. And the last 2 days, probably a sympathy run because of the U.S. markets, but you're seeing a big move up. The economic data today for the British pound was not really pretty. Notice up here at the top. No problem. Good to see you, Randy. GDP numbers came out, and they were expecting it to go from negative 0.1 to negative 0.4. Now, remember, the British pound they were kind of late to raise rates, but they're aggressively raising, doing 50 basis points and maybe 75 basis points per clip. They came out much worse than expected on their GDP month over month. That's not a good thing. That means that they're diving into worse problems. You also had construction output was worse. Goods trades balances was slightly better than expected. Most of the data here was actually relatively negative for the UK. However, you still had a sympathy rally with our equity market. So I'm not sure whether I want to believe this British pound rally based off bad economic data, unless the bad economic data means that that's going to force the Bank of England to start to raise rates even more aggressively. Now, on the U.S. side of things, your economic data really was not that exciting. You have this statement down here, which I don't really care anymore. I used to follow this, which is the University of Michigan Consumer Sentiment Report. I don't even really bother with it anymore. Right now, it's dropping lower, so I don't know. I don't care about UOM, but that's what was there, and I thought I would just share that with you guys so you could see it. All right, let's go into. I'm going to start with Eric's question. I have quite a few that have come in, so let me just start with Eric's question here, which was about engulfing patterns, right? And again, if you have questions, type in the chat, bring them on in, and if you're watching the archives, type them down. If you're not watching live, type your questions down below the YouTube channel. I'll get to those on the next show. So Eric, and I had two questions from Eric, spelled differently, by the way. Eric says, I'm a regular on your show. Love it, by the way. I had a question about the engulfing patterns. How do you personally trade them, and what does it say on the chart? Okay, so I will tell you this. I don't personally trade engulfing patterns. I'm not a fan because I think what an engulfing pattern says to me is the train's already left the station. Now I have to run to catch up, and I'm leaving a lot of meat on the bone. And I'll drew some examples here to hopefully help you to clarify that a little bit and make some illustrations. So here are some engulfing patterns. I know many of you follow engulfing patterns, but there's a couple basic fundamental pieces that must be there for engulfing patterns. So let's start off on the left-hand side of your screen. I will start with a bullish engulfing. And typically when you have a bullish engulfing, you're in a downtrend, right? So you've got markets been drifting down. That could be, this could be on a 5-minute candle, an hourly, a daily, a monthly, but generally you want to see things drifting down like that. And what happens is you get, at the bottom here, you get this nice red candle, and it ends near the lows. It doesn't have to end at the lows, but typically it's going to end near the lows. Then the next candle. So usually I'm going to be looking for engulfings or hammers on a daily chart because you need to have gaps for an engulfing really to work. The next day looks like that, where you have a candle that's the opposite color. So in this case, we had a red candle on down day. The next day starts lower and completely engulfs it, meaning that this entire candle right here, this candle right here fits inside that one, right? It could just squeeze right inside that. That is really the clue. And a lot of people will say, oh, well, if it has a topping tail like this, right? Oh, it's not an engulfing pattern because the entire candle doesn't fit. Well, I generally focus for the real body, which is this piece here, okay? So that would fit inside there. This would be an engulfing pattern. Now, how would you trade it, I guess is Eric's question. Well, typically what you're going to do is you're going to wait for confirmation. So I would draw a line across there. Let's get rid of this topping tail right here. We don't need that one anymore. So I draw a line across there. What I'm waiting for is it to open up anywhere down here where I have this X. I want it to open up down below, and then once it crosses, I'm looking to buy into it, right? I want it to confirm to me that it's moving. And generally when you have this engulfing pattern, it's just a sign that people have been waiting for this thing to turn around, and all of a sudden it happens in one day. Generally what you want here is increased volume, right? So we'll just put really high volume down here at the bottom. These other pieces over here, you have declining volume. It looks kind of weak. It's selling off maybe with not a lot of enthusiasm, but you get the huge surge right here at the bottom of volume. That would validate it. But look how much movement this candle has had, right? You've already left a lot of money on the table, and now you're kind of chasing it as momentum moves to the upside. So I personally don't like engulfing patterns. I would much rather trade a Harami pattern. And some of you might be, well, let me go through the engulfings, and then I will morph this whole presentation into a Harami one. So hopefully you guys understand what the engulfing is, what it represents. It just represents an aggressive surge in enthusiasm for the security that's been beaten down for some time. All right, that's the bullish engulfing. Of course, you have a bearish engulfing, which is the exact opposite, right? You've got a market that's been moving up. It's been on a nice little uptrend. GD, I'll get to your questions above. Retype it because I'm scrolling like crazy and trying to do too many things, but retype it, GD, and I'll get to your question. In this bearish engulfing, again, nice uptrend. You could look at any time frame, but I prefer to look at dailies. And then all of a sudden, you have a nice green candle followed by a completely engulfing red candle. And to Eric's question is, how do you stop? What's your stop placement for that? Would it be okay to use a specific tick value? You could. Generally, what most people want to do is they'll do something like this. So let's use the bearish engulfing, right? So they're drawing a line across the bottom, and they're saying short when it drops below that line, right? So if it drops down below here, go short. Then they're using this top part, and they're saying, there's my stop. To me, that distance, this may be a significant amount, right? This could be a huge value from that stop value to the short, which is, again, why I'm not a fan. I don't really like engulfing patterns. Typically, if I'm trading in engulfing, I'm going to be more of a momentum trader, which is I'm looking to get confirmation if it goes down below this line, and I'll ride that momentum, and I will be very tight with my stop losses and hopefully, lock in any small little profits. And if it starts to really move, I will widen my stop loss. But in many cases, this range is just too much for me to take that full stop. So could you use an ATR? Sure. Use average your range to more dial in your entry, if that helps you, Eric. So those are your bullish and bearish engulfings. But let me modify one of these, and we'll just, since you guys will keep them up there for reference, let's do that. Take that bad boy off. And if you look here, I'm going to modify, let's see, I got to go to the PowerPoint here. I'll modify this candle, and we will shrink it down a little bit. Oh, great. Now, of course, everything disappears all at once, so bear with me as I redraw this stuff. So here is a better example, and this is one that I do like, which is that, right? And that is no longer an engulfing, that's a bearish harami. Okay, so there is the picture for that one. I prefer these. If I had to choose, there's no way I'd look at engulfing patterns. Give me a harami, because now I have an easier way, not easier, but I have a way to make this trade with taking on less risk. So for example, let's look at this engulfing over here on the left-hand side. I've got my entry, right, go long. Got my stop loss down here below the low. And this could be a significant amount. Could be way more than the ATR, maybe more than I want to risk. Therefore, I would just adjust it with share size. But it's just too big. I mean, if that's my reward or my risk, my reward's got to be up here somewhere. I'll go target. Now, if I look at the harami formation, and again, this could be bullish or bearish harami. In this case, what you see on the screen is a bearish harami. I'm doing the same thing, but I'm now doing this. There's my short, and there's my stop. So you can see that the range itself is significantly shorter. So the amount of capital that I'm risking is much lower. And for me, I prefer that. And again, I'm not trying to dissuade anybody from looking at engulfing patterns. It's just the risk component tells me over here that train has already left the station. The size of this green candle, when I look at it, just represents how much money I've left on the table. Whereas over here, I have, in this bearish harami situation, I've got markets rallying, looking good, big green candle, all of a sudden, hesitation right near the top. It's like, ooh, right near the top, it hesitates. Now, that doesn't mean it's going to die from here. So what I have to do is I have to wait for confirmation. Put a line across the lows. If it breaks below, boom, I got my short. And now let's just say that this range here, let's call it 2 points. Well, okay. Well, maybe 6 points would be my reward. Target 1. There we go. Now it's a much more doable trade to me than looking at engulfing patterns. So I hope that helps. I definitely don't hang your hat on these patterns. They are not the answer. These patterns are designed to show you, not designed to show you anything. They are a reflection of human emotion, psychology, and behavior analysis. In many cases, and I think a lot of the veterans in this room would agree, the trading is pretty much that. It's behavioral analysis. I'm trying to find out, what are the traders thinking? Where's the emotion? Where's the pain point? It's kind of like down here in Southern California, where we have the world's best drivers. I'm being extremely sarcastic. Our drivers, I can't believe that 90% of them have passed a driving test the way that they drive. But you're driving down the road and you see somebody swerving in their car. It doesn't mean that they're drunk or they're going to crash, but the probability goes up significantly, right? And you're just like, hey, I'm moving over. I'm getting away from that individual because they're swerving and, maybe they're drunk, maybe they're texting, but it's just risk. Well, in trading, I think it's the same way. When you see a harami formation, it's a sign that there's something happening in there. And what it usually represents is a calm after a nice big rally, that excitement. How many of you have heard of what's called the vomit comet? Yes or no? You ever heard of the vomit comet? While I read these questions, I'll wait for the vomit comet to you guys. If yes or no, have you heard of the vomit comet? If you go in and get stopped out, would it be okay to jump back in? That's a matter of personal preference. For me, I would say no. Okay. GD says the engulfing patterns start with an amateur gap, adding to the strength. Yeah, I'm not going to go into amateur and professional gaps, novice gaps, but there has to be a gap on an engulfing, right? You have to have a gap up, which just adds to the euphoria on a bearish engulfing, and then all of a sudden the candle rips down, or it gaps down and then rips up for a bullish engulfing. So less. Of course, you've heard for the vomit comet. Nobody else have heard of the vomit comet. Some drivers see the lines and lights and say, yeah, right. Try to go to Italy. Oh, you never heard the vomit comet? All right, cool. I will explain the vomit comet right after I have another shot of my Jefferson Reserve whiskey. Okay, so I swerve driving while typing. Oh, don't be driving, big M. So what the vomit comet is, it's a way for astronauts, and I guess civilians at that rate, to test for weightlessness. And what they'll do is they'll put you up in a special plane, and it goes up at a really sharp angle, and then they will cut the engines. And so what that causes, the momentum from the acceleration of the upside is causing that, obviously, the plane to soar through the air. But when you cut those engines, you have this massive weight that just starts to drop. And when it does drop, you get this momentarily bliss of weightlessness. And then as the plane starts to drop, then it really picks up speed and tanks. To me, I look at something like this harami formation, this bearish harami at the top, is kind of like the vomit comet, right? You're like, it's just slowly moving up, or even quickly moving up. has this nice big green candle, then hesitates, and then I'm waiting for the confirmation, and whoom, I should see a nice downside move. Hey, no problem, Eric. Thank you so much for the contribution. I really do appreciate that. You'll add to my whiskey collection. Happy to answer your questions anytime, my friend. So in this case, you'll wait for the next day candle to go below it. Yes. And those are just my rules. And here's, when we look at the different rules out there, there's a reason I have rules in place for me. Again, try the strategies, play with haramis, see what you like about them, and maybe you can tailor something to you. Here's a problem that I had in the past with this harami formation. So just to further make this example here, let's say I've got this mapped out, right? There's my stop, my target, and my entry price, okay? Now, what's happened to me many times is, let's say the next day, so we've got the harami, I'm waiting for the next candle to form. And let's say this is a daily chart, and we've got, here's Monday, here's Tuesday, and then Wednesday's candle opens right here, down below the entry. And I would many times just go short right away. And I'd go short because, well, I've got the harami, it's showing weakness. And all of a sudden, it just literally just screams up, and I'm now in a short position. So what I've changed in my style, and again, you don't have to do my way, it's just the way I've learned over the years for myself what works, is I will leave money on the table. I will let it, if it gaps down here, or here, or here, I'm not taking the trade. I don't care. If it opens up anywhere in this range, or even higher, and then comes down and breaks it, that's the key to me. I need it to confirm and prove to me that it's gone down below that level. It's blown through whatever demand zone might have been created on that harami pattern. So that's my perspective of it. Again, that is not the answer. It's just what works for me. This is the result of 20 plus years of trading these patterns and formations, and we're all going to react differently to it. Different rules in place help us. And that's why, we talk about trading plan, which I got to get talking with Ryan about. Next week, we will review 2 trading plans that were sent in over the last couple weeks. So there you go. Do the wicks matter on the harami? Yes. I mean, depending on how large the wicks are. If there's too big of wicks, then it makes you wonder about the validity of the pattern. Generally, a small wick here and there is not that big of a deal. No big deal. Let's see. The classic SoCal driving. Yeah. That's what happened today. It happened the same thing to me. Some guy cut 4 lanes. He went all the way across, almost ran into me, and then gave me the finger. It's like, man. Anyway. Tom, are you drinking whiskey, buddy? the Comet. Classic car. All right. Eric says, when you combine the engulfing or harami equals hammer or shooting star, well, to me, nothing equals the hammer or shooting star, right? Those are by them. What I love about a hammer or shooting star is it's a single candle. And let's take it one step for, well, I don't want to make this a whole candlestick show. Let me make sure I get through the rest of my stuff today. But, you have things called dark cloud covers and homing pigeons and falling windows and 3 black soldiers and 3 white soldiers and 3 black crows. There's so many different candlestick patterns out there. I encourage people not to get so hung up on the pattern name itself. When you look at any chart, right? And again, I think you probably picked it up from watching this show over the years. I'm not so concerned about the specific candle. What I do is I want to see what the picture is telling me, right? This is artistry. This is art. This is a result of human behavior, and the picture is being created live. That's why I love trading, because this picture will not be the same tomorrow or the next day or the next day or the next day. You have to keep fresh. So, you look at something like, I don't know, Amazon, right? Let's see. Well, and you know what, real quick, let's go to like FinViz. I think FinViz actually has a candle filter here. So you go to the front page, double tops. So it doesn't have a candlestick piece. I thought it actually had a candlestick one where you could look at specific candlestick pieces. Let's go to another one called Stock Fetcher. And just to see what this is, Stock Fetcher. There's some free things you can do here in Stock Fetcher. I wouldn't pay for it. So let's go here. I'm going to go to candlesticks. And what would you guys rather see? You tell me. Would you rather see an engulfing example, shooting star example, or harami example on today's market? I'll let you guys pick it here as I wait. Harami, engulfing, or shooting star hammer formation. You let me know. That's why insurance premiums. Yeah, it is. It's insane. I have a bunch of electric bikes, and it's like, you're not supposed to ride electric bikes on sidewalks. And I had a guy stop me and he's like, hey, you can't ride that on the sidewalk. I said, dude, You think I'm going to ride in the street? You're insane. No way I'm going to ride in the street with these people on their cell phones all the time. So, Les says shooting stars. Finn visit screener. Oh, in the screener you can? Okay. I knew you could somewhere. Shooting star. I got 2 people say shooting star. Let's go to shooting star. You're my shooting star, no matter where you are. Okay. So here is the results. There's several different things here that you can modify. What I like to do is I'm already going to go in here and modify the filter. Unfortunately, it's not going to allow me to do anything with volume. If you pay for the filter, you can do all kinds of cool stuff here, but close above $5. A shooting star is a bullish potential trade, right? So there's no way I'm looking for a stock with a hammer or a shooting star formation at $5, right? So let's say above $55, because I want to make sure it's got a price that has some meat on the bone. So here are 2, NEWR, and I would say that is not a good shooting star. Okay, how about CHDN, Churchill Downs, CHDN. Now, this is late, and they're calling this candle right here, not the one today, but the one from yesterday, they're calling that a shooting star. So at night, this will probably readjust. Personally, that is not really a shooting star. What I mean by that, you guys see right here. If we look at that chart, would you call that a shooting star? Not really, right? I would want this body, this green body, to be smaller. However, I could trade it the same way, right? I would simply go out here, put a line across the bottom and say, okay, tomorrow, if it opens up above 217.10, I am going to short it. Or once it opens up above and closes below 217.10, I'd short it. And today, no trade, right? It didn't make it. Now, could this still be in play? Absolutely. It hasn't broke below it. At some point, it probably will to fill this gap. Let's go other ones that might look good. Oh, here's a decent one on Banff, Bank First Corporation, BANF. And unfortunately, guys, these are all after the fact. But look right here. To me, that is not a shooting star. Right? That is not a shooting star. But again, it's the same basic principle. All right, put a low below the low of that day, and today it opened up above it, screamed down. Would have been a very nice trade for you. Merlin, would you buy a put on Meta? Well, I had calls on Meta. I'm kind of bummed. I sold out all my calls on this. Excuse me, this little candle right here as we got into 101. And I'm looking at now $12 higher. Boy, I had enough calls that would have been a huge trade on Meta. At this point, no, I would not buy a put on Meta. And you gotta let me ask you this, Rob. And I'm not trying to be testy or defensive or anything, but why? Right? Why would you think at this moment, based off what you see on the price chart, that now is the time to buy a put on Meta? Now you may be thinking, well, down the road, Meta sucks, they're going away. This is going to be like what's that stupid face chat? Not face. MySpace, right? Oh, this will be the next MySpace. Well, while I do have my opinions and I look at this and I'm not a big fan of Meta, I got to look at this and say I don't have anything in here that's saying from a technical perspective it's going down from here, right? That's the problem I would have with this. So I would say no, not comfortable buying a put on Meta. I might actually be more interested in selling a put. I know that sounds crazy. So you could buy the put from me, and I would probably look at somewhere around the 88s. Now, I go below these lows right here, so I'm not exactly sure how it's priced. But the reason for that is I still think that you're going to get this momentum to the upside and potentially even close this gap. So kind of bummed I got out of my calls. But, hey, like I said, I had a pretty nice rate of return for just a couple days trade. But if you're going to buy a put here and it was at supply, then I'd feel more comfortable with it. I just don't see the reason to want to short other than Meta sucks, right? So it's a counter trend trade. You're shooting star short. Yes. Actually, no. It could be, right? So if you're looking at a shooting star, and let's go back to that ticker symbol I was just on, which was BANF, right? That one was not counter trend. So here's BANF. If I looked here, is this a counter trend trade? Well, it really looks like it's just been chopping. It actually looks like it's forming an ascending triangle here. So I don't know if I need to necessarily call this a counter trend trade. What I'm looking for in a shooting star would be, ideally, a chart that looks like this. So let's say you had this chart pattern right here, and it's not a shooting star right now, but let's say it was at this hard right edge at a big shooting star. I'm feeling that, okay, it's moved up so much that that could be a pullback. Now, if I'm looking at a shooting star that's in the middle of this gigantic uptrend, remember, there's impulse and corrective phases. So what I'm really anticipating is a pullback, but it's not like this trend is going to be over, right? That would be a counter trend trade, yes. And I'm looking for a demand zone that shooting star could pull back into. Could you look for a shooting star in a downtrend? Yeah. Let's go back to something. Well, this thing is obviously not trending down. But let's say right here, let's say hypothetically, you were looking, well, let's say right here, hard red edge. Let's say all of a sudden on that hard red edge, you had a really nice shooting star. Well, that's not a counter trend trade. That actually would be a shooting star going with the trend, and therefore I'm expecting a bigger gain out of this one because I'm going in the direction of the prevailing trend, which is stronger. Hopefully that makes sense there. GD, that makes sense? All right, let me go move forward here because I want to make sure I get through a couple good questions that came in. I didn't realize how quickly time flies. Here's the next question from Alan, which is a great one. Alan says, if we want 100 sample trades to verify that a strategy works and everything works until it doesn't, how many failed trades should there be to consider changing the strategy? Oh, man, that's a great question, and I don't have a specific number or metric there. What you're looking at, in my opinion, would be out of those 100 trades, how many did you gain on and how many did you lose on? And that by itself does not mean that the strategy works, right? Because you could be right 80% of the time, but your winners are only 1 point and your losses are 3 points. Well, you're a net loser. So it's not just about are you winning or how many trades are profitable. There's also the metric of what's the reward to risk ratio, right? How big are my losses compared to my gainer? So those are the two variables I would look for. Now, if I had 20 losing trades, let's say I had 51 winning trades out of 100. So I'm losing on 49. Well, technically, strategy works, right? Because it's just 1 percentage point above 50-50. It's 51% chance. So technically, the strategy works. Now I need to go back and look at my reward to risk ratio and how am I establishing my reward to risk ratio. So if I can now modify variables and get to maybe fix a couple things through analysis and bump that up to, let's say, 52%, but I can also increase my reward to risk ratio through better trade management, then the whole system starts to shift to a greater profitability and success rate. So I don't have a specific number there, Alan, or anybody else who's interested in it. It's just you kind of want to do a bunch of trades using a strategy to see how it really works. Problem is, especially people starting out, they are jumping ship on strategy so quick. I mean, it's just like next, and you don't really know what's working or what doesn't. And you bounce through so many strategies, it's hard to get consistency. Koja, when you buy puts or calls, what expiration do you use for the day for a daily basis trade? And is it at the money or out of the money? No real set rule on that. Typically, if I'm buying a call option, I'm looking at 90 days or more. If I'm selling, or if I'm buying an option, I'm looking at 90 days or more. If I'm selling an option, I'm looking 30 days or less. I actually do enjoy selling weeklies. I'll sell that ice cube on a hot day, no problem. But I generally like to look out 30 days for selling of it. And as far as at the money, out of the money, really depends on the situation and what I feel is happening with the price at that moment in time. So I don't have a definitive there. Okay, so Alan, hopefully I answered that question for you. I had to laugh at this one. So Odin, who posted on the YouTube channel, what is the best way to make money from crypto trading? At this point, the best way to make money from crypto trading is to not get into crypto. Just stay away for right now. At this point, I would say the way to make money is you got to just stay with the broader trends. In this case, the crypto trend has been just brutal. It's been ugly. We have some of the three of the worst events that ever happened in the history of cryptocurrencies have happened all this year. And you look at this picture right here, I'm looking at a big downtrend in crypto. So what makes you believe that you should go the opposite direction? So I would say stay with the trends, right? Go with the trend. The trend is your friend until the bend at the end. To me, that is the most important piece here. And at this point, we're still trending down. So it's not looking good. Hopefully some of this will, holy cow, BNB. Oh, this is on FTX. The FTX exchange has these crazy prices. I own a lot of BNB, and it's funny. Notice right here, guys, I have two quotes for BNB. One of them is down 5.3%. The other one is up 73%. And that's because people at FTX are trying to convert to different tokens, which they may possibly be able to move off of that exchange. So let's get rid of the FTX quote. Let's go look at FTT token, which is probably up huge there as well. FTT, I think I already deleted it off of, FTX is down, 35%. Bye-bye, that one's gonna disappear soon. So Odin, that's what I would say the best way to make money is probably stay out of it right now until the dust settles, unless you're a long-term holder. Now, I got to give a shout out to Lisa who sent this one in. Now, this was from several days ago, right? When Lisa sent me this article, this is what the picture looked like. Let me real quickly modify the chart. This is what it looked like, right? There's HUDI, Huadi International Group, right? And here's what she says. Hudi from $31 on Wednesday, a little higher on October 21st, to a high of $187 today. And she was basically saying, like, here's another one of those crazy high flyers. And this is, sickening, because what happens is somebody got into this and bought into this one not knowing what was wrong with it. And let me show you what you should do. Whenever you see these types of things, hey, Alan, good to see you. Wasn't sure if you're here or not. When you're looking for these types of things, go to Yahoo Finance or any finance site that gives you statistics on individual companies. And let's go to finance here. Wow, front page on Yahoo, FTX Exchange, Chapter 11, bye-bye, Felicia, HUDI, right? So you just type in this, and this is one of the issues why, oops, I'm sorry, I'm not even showing you. This is one of the issues that FTX had, and one of the reasons that I think FTX and Alameda Research are both going to go belly up. It has to do with tokenomics. The shares. Where are the shares? So I will show you here real quick. Go to statistics. And if I scroll down, you'll notice that shares outstanding, right? You have 13.24 million, and the float is 3.23. Now, those two names you really need to understand. Shares outstanding means how many are there total in the universe? And there's 13.24 million of this Hudi. But there's only 3.23 million in circulation that you can trade, which means that there's 10 million more. There's literally 75% more, or sorry, three times as many shares that are being held somewhere that at any moment could be sold. So what happens is, and this is kind of the new gimmick, be aware of this one, it's going to happen a lot more, is a company will go public, but they're going to go public with the float number. Only a small percentage of their overall shares right there, right? 3.23 million. But the insiders, which right now have over 70% of the shares, will keep those. And what they do is they start buying their own float. So what happens is, let's imagine I've got 10 million shares. I put one of them on the market and I keep 9 million, right? So I've got 1 million of my shares on the market. So what I do is I start telling all my friends, coworkers, employees, I want all you guys to go buy HUD. Remember, I'm still holding 9 million. Only 1 million's on the exchange. And you go to the market and you start buying your own stock. You buy your own stock. And all of a sudden, because it's so illiquid and there isn't much there, all of a sudden price just starts to creep up. Then it's all of a sudden up 100%, 200% on the day. So it makes all the headline news, makes it on Bloomberg Finance, makes it on any stock filter, any stock watcher is like, holy cow, this thing's up 200, 300, 400% today. And then when it's up, those insiders unload like they're at a strip club making it rain. And here is what that chart looks like after the fact on Hudi, or Hadi, I don't know how you pronounce it, but there is like this monstrous run, right? Notice the next day. It's way down at the bottom. You can't even see it. The next day, it went from $180, opened up at 23. Then the next day, lower and lower and lower, and this thing is well below where it was. But this rally here was from people buying it up and slowly, incrementally acquiring that position. So this is just a typical scam you see on a regular basis in the markets. I've seen it happen a lot more lately, so be careful out there. Make sure that if you are watching these markets and you see something wild like that, know that it's probably too good to be true. Don't jump on it. And if you see a huge discrepancy between float and outstanding shares, run away. Just to give you an example, let's look at, Facebook, right? Let's look at Meta and see what that looks like. So here's Meta, and we'll go to their statistics, and notice shares outstanding, 2.25 billion. But notice the float, 2.2 billion. So all of the shares, the vast majority of the shares are sitting out there in the public, right? There's a few there aren't, but not enough to hurt anybody. Oh, can you imagine, Big Eb, those that bought at 180? And I hate to sound like such a jerk, but how dumb can you be? This thing was $30 yesterday, and you just spent $180 on it? I mean, you want to make it on the show as the donkey of the day, I got you covered, you know. You just can't do that type of stuff. And it sucks because people get so emotional. They don't, it's FOMO. When you have somebody like Elon Musk tell you that, was it GameStop? I think it was GameStop was going to go to 1,000, right? He goes, if it goes to 1,000, I will put a sticker on the next rocket or take it to the moon or something like that. I'm like, are you kidding me? And you look at these poor saps over here who are, you know, buying GameStop at 120, and here we are back at 26 bucks. AMC is another pump and dump, right? You got just, the list goes on and on. And I've said repeatedly on this show, especially you guys, when we were doing the show back here, I said, this thing's going to go back to, not to zero. AMC will be around, right? Movie theaters will probably make it. But, you know, it's before that pump that we saw, the all-time high on AMC, like all time, was back in 2015, 21 bucks. So, I mean, you'll just look at this chart here. I'll put this blue line right at the top. And that's your peak. And these are the glory days, folks. This is when we had no COVID, no worries, you know, kiss your neighbor and make out with 57,000 people at once and maybe get a cold from it. Well, all of a sudden, we had this huge spike that brought up over $44, higher than it's ever been, and the movie theaters were closed. Like, is something wrong with that? Dogecoin's another one. I mean, you know, Dogecoins should just be called dumbcoin. The fact that people still buy this thing is just jaw-dropping to me, believing that something's going to happen with this, you know? Now, that said, I did own it. I can show you the paper trail. I owned it. I owned it right here. And I bought it like 36, 37, and I sold out when Elon Musk went on Saturday Night Live and pumped it one last time. I sold out the night before, made 100% rate of return on it, just because I knew that the people were going to go nuts over Elon Musk on Saturday Night Live, which, by the way, was pretty damn funny. I think Elon Musk did a great job on Saturday Night Live. But this thing will ultimately just keep on drifting lower and lower and lower and disappear. Like Kaiser Sose, he's gone. And then, of course, you guys know my love lost for Shiba Inu, which is the dumbest thing ever created. Anyway, let's look at your economic calendar for next week. As far as next week's go, Monday is boring on the earnings front. You do have Tyson Foods, which I don't know if you guys caught the story, but the CFO of Tyson Foods just randomly walked in drunk into someone's house and fell asleep in her bed. Interesting. And by the way, the guy, so that was Tyson Foods. I guess the CFO passed out in some other woman's bed. And then a few months before that, or a month before that, the CEO of Beyond Meat, he got in some tussle and bit some guy's nose off in front of a bar or something? Like, what's going on with these people? Eat some meat. You don't need to eat someone's nose, all right? Let's just, anyway, sorry. I'm going off. It's Friday. I've had a little glass of whiskey. I'm having fun. So next week is all about retailers. I mean, you have a ton of retailers. You got Walmart. You've got TJ Maxx, Kohl's stores, Ross stores. I mean, a lot of big stuff. But that's going to happen later on in the week. Plus, you also have retail sales numbers coming out on Wednesday. That said, let's look at your economic calendar for Monday. You just see here, not a lot. I mean, U.S. is pretty much dead, and I don't see anything major. I would say retail sales for China, but honestly, I don't watch any data out of China. If you are trading UK markets, you do see the unemployment rate coming out for the UK, as well as their claimant count change and average hourly earnings. But that's pretty much it. Not a lot of major stuff happening over there in the across the pond. So that will wrap it up. Cheers. I hope you all enjoyed. If you guys liked today's show, do me a favor, give me a little thumbs up. Next week, I hope to get Ryan on so we can cover 2 trading plans and go over those. We're also going to have good GD, get a nugget every day, keeps hopefully the markets at bay. Hit the like button. Of course, if you have comments, questions, feedback, you can always put those down below any YouTube video. I will put all the questions into chat or into my slides, and I get to those eventually. I know I've been a little bit lagging there, so I apologize for that. Again, cheers, and thank you so much to all the veterans, regardless of which branch of the military you served in, the Army, the Navy, the Air Force, the Marines, the Coast Guard, and yes, probably the most important one of them all, Space Force. Cheers, everybody. Have a fantastic weekend. Do something good. Hug a soldier or former veteran, and I will see you guys all on Monday. Take care.